As an intraday trader, you must have a bias of that particular day that you're trading in, right? By bias, we do mean that what are you looking to do in that particular day? Are you looking to buy or are you looking to sell? Now, most traders are struggling with identifying the bias of a particular day. For example, you see these period separators here do mean that this is one day, this is another day, this is another day, these separators here. So if let's say this is like today, let's say this is like today, the day opened from here. So we're struggling to find what bias. By bias, like, are you looking for buys or are you looking for sales? So most traders don't know that if they say the day is open from here, am I looking for buys or am I looking for sales, right? So in this video, this is what we're going to be learning how to identify. We're going to be learning how to identify the daily bias. Are we together? How do you identify daily bias and know that today I'm looking for buys, today I'm looking for sales? What are the factors that you have to put into considerations? What are the factors that you have to consider? Are we together? Now, talking about the factors you have to consider, the first one is you have to be knowing the structure that the chart is showing you, right? The structure that the price movements have been making in the previous days that you're going to be basing on to determine what am I going to do today. Then also you have to know where you are. You cannot move from point A to point B without knowing where exactly you are. Then thirdly, you have to be looking, and being able to identify what changes are you being able to see and how do you interpret them. Then after that, you can apply your entries, right? Your rules that you use to take the trades, the rules to your entries. These are the 4 things that you have to consider. Just a small recap: structure that you're seeing, then you have to know where you are. Since you've seen a structure, for example, you know the rules of, like, let's say, of an M. Let me just give an example. You know that the rules of an M, this is an M that has been created. Let's say it has created the previous day. But what are the rules? The rules are that we have to first go back and retest this neckline. But then you have to know where are you at that particular time. So if I am here, I know that I'm supposed to be looking for a push up. Are you getting it? Or if we've already tested this neckline and I'm here, I have to know that I'm supposed to be looking for a sell. That's what we mean by a bias. Like, you have to be biased at a particular on a particular day that I'm looking for sales or I'm looking for buys. But you have to do that having structure in your mind and knowing where you are, and then look for the changes that you're seeing on that chart, right? And then also you can apply your entry rules. Now, without wasting time, let's get down into them. Let's start with the first one, right? What is the structure showing you? Let's look at this, for example. Is the structure trending? Are you seeing shapes? Is the market ranging? Right? Now, by shapes, you have to be talking about M's, you have to be talking about W's, you have to be talking about patterns. Which one are you seeing? You must be able to identify what you're seeing on the chart. Then secondly, is the market trending downwards? Is the market trending upwards? Or is the market ranging? You have to be having all these things in mind. For example, if the market is trending upwards, making higher highs and higher lows, where are you? Are you up here or are you down here? So that you understand exactly what you're looking for. If you're up here, you know that we have to come back and retrace and test this level, or even slightly lower here, then before we can go up. If I am here or here, I know that I'm supposed to be looking for buys. That's what we mean by being able to identify a daily bias, which most traders tend to ignore, but you have to know. It can be a daily bias or it can be a weekly bias if you're a swinger. But today we're looking at down of intraday. So you have to be knowing the bias within that day. So you're going to be using the daily or the time frames for intraday traders, right? In case you're not aware about that, we have a whole video about time frames, and I'm just going to attach it in the card in the top right corner. Make sure you check it out, right? So these are the things you have to be putting into consideration, like what structure the market is showing you. Is it trending? The shapes, these are some of the shapes that I've just shown you here on the chart. Then is the market ranging? When the market is ranging, we mean that it is trapped. Now, when it is trapped, do you know how to trade ranging markets? If you do not know, you ignore it. Then if the market is trending downwards or upwards, for example, if it's making a low, lower high, a low, you know that if I'm here, I'm looking for a buy. If I'm here, I'm looking for a sell. Are we together? This is what we mean by the structure the market is trying to show you, right? Now, let's continue and we look at the other one. Now, the second one is you have to identify exactly where you are. For example, looking at this chart here, what is the market showing you? First and foremost, know that this market is pushing downwards because we're making, this is a low. The market created this low here, reacted to it here, then broke it down. Of course, I've been mentioning this, that if you're in a downtrend, the market is not going to be smooth like this. We just draw this for learning purposes. But this is how the market shows you a downtrend. This is equal lows. So the market breaks down, comes back to retest this area here. So making a lower high, then comes, reacts to this low here, and then breaks down again. Now again, we have come back here. Now, what do we observe at the immediate price level here? What happened? The market created this low here, but failed to match it and created a higher low, meaning that there's a possibility that this market is starting something new. Are you getting it? That's the communication. So the market created for you this big W here. Let me just show you properly. The market created this big W here. Now, after W, what do we expect? We do expect the market to come and retest the neckline, meaning that our bias of this day is we expect the market to push down and retest this area here. And also another aspect that you can see is that you have an impulse. So after an impulse, what do you expect? You expect the market to push back down. So you have two confluences, meaning that there are higher chances of this market actually pushing down. You have this big W with this neckline, and you have an impulse, so you can put in the fib level. So I'm also going to attach the Fibonacci lesson in just the top right corner in case you don't understand it properly, right? Make sure you watch it. So you already have your like, you know where you are. Now you know what you're going to look out for. The bias is downwards. First and foremost, you're in a downtrend. You've gotten that. But when you reach down here, the market created for you a higher low and created a W. But you know that when a W is created, we do expect the market to come and push and retest this neckline here. So it's what we want to see. Are we together? So let's continue. Now, we also have to identify the changes that you're able to see. For example, we identified that this market here created this higher low here and created this big W in the previous slide. So what do we want to see? We want to see the market coming down. So I have marked my target area here. So I want to see the market coming down to this level here. So I've marked it. What next do I want to see, right? I would like to see how is the market behaving in my entry time frame. This one is in a big time frame. Let's say I got this from daily. Now my entry time frame is H1. So I want to see what is H1 doing before I take my trade. This is what we mean by identifying the changes that you're seeing the price doing. Are we together? So for example, here you can clearly observe that this is the level I'm interested in the market coming back to down here. But it doesn't mean that I'm just going to be entering the market because I expect it to come. We expect it to come down here to this level here. No, you're going to lose money, right? You've now identified the structure. You've gotten the direction that you're interested in. But now the changes, what changes are you seeing on the chart? This is the chart in a bigger time frame. This is in your entry time frame. And now the changes to be identified, you're interested in them being shown to you in your entry time frame. Now we do have a market that's creating higher high, higher low, higher high, higher low, higher low, higher high, higher low, higher high, higher low. Now for us to take a sell, we're not interested in the market making this. We want the market to create either a structure up here, then starts making lower lows, maybe like a head and shoulders, or to break that higher low so that we can start looking for sales. That's exactly what we are going to be waiting for it to do, right? This is what we mean by looking and identifying for the changes that the market is showing you or the price is showing you. Are we together? You do not just take trades. Then the last part or the last rule that you have to apply when you're looking for the daily bias is the rules that you normally use to take your trades. Most traders do not have rules and do not even know what they consider to take trades. You're just gambling here and there. You need to have a set of rules. Are you using trend lines to take your trades? Are you using a Fibonacci to take your trades? Are you waiting for higher low or lower high to be broken? Are you using order blocks? Are you using supply and demand? You need to have rules. You need to have a set of rules that you use to take your trades every time and then. Your set of rules must be the same. You cannot keep changing here and there, right? I've just mentioned a few, but there are very many methods that people use to take trades. People use MACDs, people use FIB, people use moving averages. There are very many other ways. Some indicators that I don't know. We're not indicator traders. We're price action traders. That's why what I've mentioned is mostly for price action, right? So if you look at how this trade was taken here, you can clearly see that when price reached here, it failed to make new highs. Instead, created like a double top and then broke a higher low and started trending downwards. So the first one, we're not interested because there are higher possibilities that it would actually break back up. So when we saw it breaking and creating new lows, that's when our entry was taken here. We applied our rules to take this trade until this target. And we did have a 1, 2, 3 risk to reward ratio. So our rule was applied here. This is the last part that you do before taking a trade and after identifying your daily bias. Remember how we started. We started by, you have to first get the structure, see how the behavior and what the price is doing. Those changes, you have to identify them. and what is the price doing? Is it on a downtrend? Is it ranging? Whatever it is doing, right? Then the last part is to apply rules to take a trade, because after identifying a daily bias, what do you want to see? What do you want to do next? You want to take a trade, because you're not just doing this for fun. You want to identify and be able to take a trade, right? So that is it for today. And if you've been struggling with identifying your daily bias, I hope this really helps you. And if you really found value in it, make sure you give us that thumbs up button. So if you really need to be good at doing your analysis, identifying market structure and all that, I suggest you do watch this next video, just that you're seeing on your screen. Have a great day.